Good morning, everyone. So let us start with the topic of the day today, that is accounting terminology again, transaction, capital, and inventory. Now, what is the meaning of transaction? If we talk about transaction, what is the meaning of transaction? That means the events or activities which take place in a business on day-to-day basis. Basically, we're talking of the activities in a business. We're talking of the events in a business. Okay. Now, these transactions you all are familiar. This is in the form of cash also, or do we transfer of funds in different accounts, or it may be in the form of sorry, debit and credit cards. The payment is done. Okay, when we talk of transaction, we always mean monetary transaction in accounting. Now the most important thing is, suppose you want to start any business, that we discussed yesterday. So let us businesses of grocery store. Let us take the example of Reliance Fresh. What activities can take place in a Reliance Fresh outlet? We have, there are various outlets of Reliance Fresh in India, all over India. So what activities can take place in a Reliance Fresh generally we are talking of? So it can be the sale of goods to the customers, either on cash or credit. Then it can be in the form of payments received on invoices, on the bills, purchase of fixed assets. Fixed assets that is purchased over a period of more than 1 year, which is providing you the benefit for more than 1 year. They have purchased the intention not to resell it. We discussed yesterday. The depreciation means, again, it is in the form of monetary value only, because we discussed it that every year the value of car is declining, value of an asset is declining or diminishing over a period of time, and that value which is diminishing, value which is actually reduced, that reduction in the amount of the value of an asset, that is called depreciation. So it has a monetary value. Then investments, then business loans, dividend to investors. Obviously, when investors make an investment into the company, they always invest with the intention to get a return. But this return is in the form of dividends. Then sale of assets, purchase of assets, payment of expenses to the customers, or payment of wages and salaries, payment of income tax, or rent of the building, and then say any borrowings from the bank, or any materials given on credit to a customer. So this all are considered as the examples of transaction. Now let us move to further thing. Now there are two types of things, financial and non-financial transactions. Whenever we talk in accounting, we only talk of financial transactions, though both of them are contributing in the business, okay, business growth and profitability, but still we consider only of the financial transactions, because they can be measured in terms of money, they are always recorded in the books of accounts, and non-financial transactions cannot be measured in monetary terms. They do not have a monetary character or a financial character. They cannot be recorded in the books of accounts, because in accounting you always have a book called journal where the recording takes place, and it is always two sides, debit and credit side. So it is always the amount of money you have to enter in the books of accounts, which is always same on debit also and credit side also. So in the journal you have two sides. First is debit and second is credit. This is debit side, and then you have your credit side, right? So debit and credit both. Now we will discuss about it later when we discuss about ledger and other trial balance accounts. Okay. Now what is the meaning of non-financial transaction? Suppose there is a training and development program in the company, and due to which the skills and the efficiency of the employees has increased a lot. So obviously this will contribute in the growth and prosperity as well as in the revenue generation for the company, but still this is not recorded in the books of accounts, because you cannot measure efficiency in terms of money, you cannot measure the skill of an employee in terms of money. So this is a drawback of accounting, that you don't give such advantage or preference to non-financial transactions. Then there is a board of meeting of the directors in which decided that you'll invest in a new project or raise a fund through new proposal, but still this approval is not recorded in the books of accounts, though there is a disclosure in the books of accounts regarding this new project investment, but there is no, it is not measured in terms of money, so it will not be recorded in the books called journal. Then we come to the meaning of capital. Now capital means what? Whatever the amount of assets which is invested by the uh, owner into the business, whatever amount of assets he's bringing along with him. Like suppose he brings machinery worth rupees 2 lakhs, sorry 20,000, vehicles 30,000, Okay, then building factories worth rupees 1 lakh, and equipments and tools worth rupees 2 lakhs. So all these assets, they're in the form of either cash or in form of kind. They all are considered as under or categorized under one term, that is capital. That is cash in hand available with the with the employer, sorry, with the owner, then machinery, then your equipments, and then your vehicles and your factories. These all are added together to calculate an amount called capital. Then we come to the meaning of inventory. Inventory means, again, we discussed yesterday about inventory, a brief idea I've given about you. That is, in all the items which are in a warehouse of the company or the stock of the company is called the inventory. Now, it can consist of four things. That is basically three things only. First of all, the raw materials which is available for making any products. The raw materials. Suppose if you are in a garment manufacturing company, yarn, cotton, these are considered the raw material. Then your like buttons, raw materials, etc. The yarn. Okay. Then work in progress, the semi-finished goods. Okay. That is the finished goods, that means already readable products for sale. Then consumables also, basically inventory consists of perishable products also, consumables also. So both the items, perishable, non-perishable, also are included in inventory. So that is why we consider it as current assets only, because they won't give you benefit for more than a year. They are considered as the short-term asset. They cannot be considered under long-term asset because they're readily available and converted into cash very quickly. Then let us come to the meaning of inventory in certain types of businesses. Suppose you talk of automobile industry, what can be the inventory? The car and the spare parts, the basically your brake parts or safety belts, your seats. Okay, your seats available in the car. Then your other raw materials like steel, aluminum, plastic. We discussed yesterday, aluminum rods. Okay. Then we talk of food industry. Obviously, the inventory will be the packets of wheat flour, cans of vegetable oil, sorry, vegetable oil, that is edible oil. Then we talk of electronic goods. Obviously, we have televisions, computers, mobile phones, etc. If we talk of construction industry, cements, and your cements, your residential flats, raw materials required to make those flats, and commercial shops included in that. So all these are varying according to the type of business the company is engaged in. Then you have